Japan threatens a third interest rate hike this year after 8 years of negative rates, and the markets are reacting negatively. This contagion in the crypto world, with sharp declines in the loss of key zones, raises the question, are we witnessing the start of further drops? The Bank of Japan has reaffirmed its stance of continuing to raise interest rates if the economy and prices evolve as expected. This statement, made by the central bank's governor, Kazuo Ie, during a recent government panel session, highlights the continuity of the country's monetary policy and offers a clear signal about the direction Japan will take in this area. During his speech, Ueda emphasized that despite the global volatility caused by the rate hike in July, the Bank of Japan remains steadfast in its commitment to raising borrowing costs. This approach, according to Ueda, will depend on the realization of economic forecasts, making it clear to investors and analysts that Japanese monetary policy will follow this course if the expected conditions are met. The Bank of Japan's statements come in a global financial environment sensitive to its movements. For decades, Japan maintained extremely low interest rates, encouraging carry trade, a strategy where investors borrowed in yen to invest in more profitable markets. However, the rate hike in August 2024 changed this dynamic, discouraging carry trade and causing capital to return to the yen, leading to a significant drop in stock markets, especially in Japan. The Bank of Japan's commitment to continue raising interest rates marks a significant shift in the country's monetary policy, and its impact is already being felt in global financial markets. The evolution of the Japanese economy and prices will be crucial in the coming months, as it will determine whether the central bank continues down this path or if economic conditions will prompt an adjustment in its strategy. We can already see how the Bank of Japan governor's words have started to trigger sharp downward movements. And it doesn't stop in Japan. The contagion has also affected the American market, with drops in the Nasdaq and the S&P 500. Now, we must wait for the upcoming Bank of Japan meetings, which will be held between September 18th and 19th, to see if the earthquake occurs and they continue with the rate hikes, sweeping the entire market with them. As we have already seen, the contagion effect is very powerful. However, the market is already anticipating this drop in rates. And now, let's move on to the crypto world. On screen, we have Bitcoin on the 1-hour time frame. We can see how the Japan effect has also taken its toll on this currency, as we experienced sharp declines early this morning, leading to the loss of this key area, a defense zone where all these buyers on our left are defending these positions. While we see that this defense zone has been breached, let's analyze a bit more deeply to determine if we can consider it a trap or if this zone is simply lost. But before that,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
let's go back to the Bitcoin chart on the 1-hour time frame. Here we can say that this drop in Bitcoin's price didn't catch us by surprise, as in the last video, we were expecting the price to develop a bit higher before seeking this drop, and here we were identifying a selling point. Notice how we mentioned it.
When it comes to Bitcoin, we're talking about the potential for a climactic move that hasn't happened yet. Of course, anyone might say that this trend line could be key for looking into bearish entries, and it's true, it could be possible. But when we look at other assets, it also makes us think that if they want to, they could go after some liquidity, which could be part of a broader redistribution process. Now, let's speculate a bit, even though I'm not thrilled with what I'm seeing. Still, it's possible that the price could be heading to grab some liquidity, but don't get it twisted. Unlike how some traders in the smart money concept space misuse the idea of liquidity, jumping into shorts from what could be a trap scenario and letting it run as far as it will go. We'll see whether this flat pattern eventually breaks or not, but ultimately, if we're asking how to take a short position when we see an opportunity in Bitcoin, that's the question.
This type of analysis, looking for and identifying entry points for both longs and shorts, is what we do daily in our private Telegram channel, Crypto Insight Premium. We're excited to announce that yesterday we launched our Crypto Insight Premium community. This is a private Telegram chat where we conduct live asset analysis every day, and we hope you'll join us. We already have another Spanish-speaking community with the same methodology, where all participants share their trades and trading ideas. This way, the community grows a little more every day. There are just a few requirements to join our community. You need to be a user of BitUnix or by DeFi. Additionally, you should have deposited at least $100 worth of cryptocurrencies in your BitUnix or by DeFi account. Plus, you must use this account as your primary one for futures trading. In other words, you need to be actively trading. By DeFi has a special promotion for new Crypto Insight Premium users that will last for 6 more days. If you make a deposit of up to $200, you will receive a 10% bonus on that amount. Moreover, if you reach a trading volume of 400,000 USDT, you'll get a $200 bonus. And if your trading volume reaches 800,000 USDT, you'll receive a $400 bonus. Meanwhile, BitUnix is offering a promotion where, with a deposit of $100 in a single futures trade, you'll get a $20 bonus. If you reach a trading volume of $1 million USDT in a month, you'll receive 0.5 Solana. Let's not forget that neither of these platforms require KYC or VPN, so you can join from anywhere in the world. We've left the link to the form in the pinned comment below the video. Once you've met the requirements, complete the form, and within 72 hours, we'll be ready to help you find trading opportunities every day. Returning to the Bitcoin chart, also on the 1-hour time frame, but with a bit less zoom, we can see on our left a strong decline, which then had its recovery, only to start falling again. And here I ask myself, will the market seek to replicate this original bearish impulse? What we know here is that buying strength has been weakening, and the market has gained selling strength. That said, the conclusion is that we will follow the declines. We are weighing more heavily on the selling forces. And now let's switch to another asset for a while, which might give us a bit more information on this. We're looking at the Solana chart, also on the 1-hour time frame, and here we have, this is a chart we've been analyzing, an inverse corrective pattern. And why is it inverse? Well, here we have a bullish impulse that, although it didn't break down, clearly shows us a bearish corrective pattern. Here we have its trend line, and over here we have the W, the weak Y, and we are currently moving through the bearish Z. As we've mentioned several times, trying to reverse the Z is very dangerous. Z's tend to come with a lot of strength and momentum. That's why, rather than trying to reverse it, we're going to follow its movement. Notice how the Z is being formed in a wedge pattern. This wedge pattern allows us to track it as we wait for it to continue developing, doing what it needs to do. And when will we know that the wedge has been broken? We'll know when the upward movement is strong and decisive. Timid, gradual movements aren't the ones we like to see for breaking the Z. Instead, we look for abrupt movements. On the other hand, Solana also shows us that we're coming from a bearish impulse, a channel. And here, after the range, we'll be waiting for the bearish climatic action. Therefore, these are two bearish forces that support the same idea. While in the very short term, we might see volatility in the completion of the wedge, we'll be waiting for that climatic action. But clearly, we're bearish in the short term. And I'm going to emphasize this short-term aspect a bit more. Let's remember that we're looking at the 1-hour chart. Now, returning to Bitcoin, what we see is that after this bearish impulse and correction, we have another impulse. And here, we're going to encounter resistance in this defense zone. This defense zone, as we already know, is marked and is being defended by all these buyers on the left. Therefore, it's normal to encounter resistance here. As I mentioned earlier, we know that the selling force, the bearish force, is currently winning the battle. And here we have the sellers also on our left from a slightly more micro process, showing us this aligned supply, which they are also defending. They're marking the territory, setting the boundaries, and saying, watch out, you can't pass here. And how will we know who will win this battle? We're not going to guess. Instead, we'll rely on the structures we're analyzing and the cross analysis that Solana also allows us to see. Therefore, to determine if this selling force we're talking about wins the battle, we need to see the definitive loss of this defense zone. And from what we're seeing, we're still in a micro plot. The Z in Solana and its continued downward movement will allow us to anticipate whether this movement is ultimately going to be a trap, only to recover the zone later. We need to maintain proportionality between the trap and the structure when zooming out a bit. So reviewing the concepts, we're going to rely on cross-analysis and lean on the information Solana provides us. Therefore, we're going to pay special attention to the development of its wedge and the volatility I mentioned that we're expecting for Solana. We can also expect this in Bitcoin. The key to the outcome will be in the break of the wedge, since if we see a strong break of Solana's wedge upwards, we might expect Bitcoin's price to return within this structure, and this zone we consider so key won't be lost, allowing us to recover the bullish strength in Bitcoin. By now, many of you know how important and crucial defense zones are for us. Therefore, we know that if this currently mini trap continues to develop downwards, we would be losing this defense zone. This means that these people are no longer defending us, and now hold on to your seats. If you enjoyed this advanced technical analysis, let me know in the comments. Also, give the video a like, subscribe to the channel, and click the notification bell so you don't miss future analyses. Share this video with your friends and other trading and cryptocurrency communities to help more people grow in their trading. Good luck with your positions, and see you next time.